Today we're discussing the recent developments in the banking sector, as panic over the US banking system appears to be fading. A fresh burst of anxiety blew in from Europe. Credit Suisse shares crashed more than 20% in Zurich, dragging down European bank stocks along with it. US stock futures fell Wednesday morning after rallying strongly on Tuesday. But what's the connection between Credit Suisse and SVB? They're facing unrelated problems that happen to take place at the same time, worrying investors about the banking sector. Credit Suisse has been a slow-moving car crash for years, wrote Peter Bukvar, Chief Investment Officer of Bleakley Financial Group. But now today's news, of course, is happening in the vortex of SVB. The global bank psychology is already fragile, Bukvar said. Investors around the world were thoroughly rattled by the collapse of Silicon Valley Bank and Signature, making the banking sector particularly vulnerable to any signs of trouble. Did the SVB mess cause Credit Suisse shares to tank? No. But are European and US banks facing a similar macro environment of suddenly higher interest rates following a decade or more of low, or even negative, rates? Yes. European bank stocks were dragged down by Credit Suisse's decline, and US stock futures fell after rallying on Tuesday. The banking sector is particularly vulnerable to any signs of trouble. In conclusion, Credit Suisse and SVB's issues are unrelated, but they worry investors about the banking sector. Fragile global bank psychology and higher interest rates are causing vulnerability in the banking sector.